Hi everyone, this is Dave. Today I'm going to cover the chart on Realty Income Corporation, ticker symbol O. Before we get into that, my disclaimer. I'm not a registered financial advisor, lawyer, certified professional accountant, or real estate agent. The content of this video and all other videos on this channel are the thoughts of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk. Do not invest any capital unless you understand and accept those risks. If you need financial advice, please contact a certified professional accountant or a registered financial advisor. So let's get into the charts here. On the left side, I have the weekly time frame up, going from kind of the 2015 area to today. And on the right side, I have the chart for set to the daily time frame, and it goes from 1995 to, let's say, August 2000. So when you first look at these two chart patterns, there's probably lots that you can see that are similar, especially since I've marked some off with arrows. I had a little bit of trouble charting this one at first because I kept getting hung up thinking that this peak was in 1997 was going to line up with the peak from 2020 before COVID dropped. But I realized that the pattern actually plays out a lot more natural if I look at this kind of run up in mid 2016 down to February of 2018. That lines up really well with this right here from January 1996 to May 1996. The reason that I'm using this area here in 1996 instead of this area here in 1995 is part of my theory that the charts are almost on repeat from the mid 1990s to early 2000s, from then to what the charts look like today. I think there was a little bit of a reset in the 1995 area on a lot of charts. And for that reason, I mean, you can look back and you can see from kind of the bottom of the Great Financial Crisis, March 2009, you run up and then you get this big spike right here, which to me looks a lot like this spike up here potentially when the chart started in 1994. And then it comes down and it tracks that reasonably well, and then it comes up and tracks this area here from January 15th down to the lows of September 15th. Looks the same as February 1995 to April 1995. But from there, the the pattern breaks, and it's almost like this area didn't happen. Sort of mid to late 1995. It almost feels like that didn't happen, at least until kind of like October, November 95. So anyway, I realize that might sound crazy, but I guess that's why I named my channel The Abstract Investor, because I might have some different thoughts on some of these charts and the way the patterns play out. and I just do my best to find the pattern and look for long-term investing opportunities. So back to the chart, you can see kind of the peak in August 2016 to the lows of February 2018. Looks very similar to the peak in February 1996 to the lows around May 1996. And then it runs up here in 1996. You see this kind of spike up. I'm just going to get my brush tool, circle that. That looks to me like that spike right there. And then you sort of have these two spikes within close proximity, just the same as you have these two in close proximity. And then for the top in February of 97, you kind of got that up, and then it comes down, and then it comes up again. And I actually believe that's where markets went or were going in October 2019. They kind of peaked out, came down, V-shaped recovery up, and then dumped off for COVID. So you can see we actually dumped in that same area in the chart March 1997, and I just put this purple line there just to give myself a visual of potentially how far, if COVID had happened in the late 90s, where the chart pattern would have gone. So now that we've covered that, this is because with COVID, the chart pattern came so much lower than what it did in the kind of 1997 area. It takes a lot more time, and the pattern deviates from what it looked like in 97 and 98, getting into 98, where a lot of this top from September of 1997 is buried down here with COVID. The amount of time that we spent and how deep this correction was for Realty income stock through COVID was huge, and it basically wiped off, in my opinion, this top half of the chart from the late 90s. So from there, I'm just going to zoom in. Again, it's kind of an abstract thought to have to factor in the downtime from COVID versus what the pattern did in 1997, where it didn't go as deep, and then sort of try to make sense of that in your head about what it would look like afterwards. And as you can see, when you get that V-shaped recovery from COVID, just like we did here before it dropped in August of 2022, we had this V-shaped recovery that went quite high in 97, but again, we're wiping that top off because of how far it went down for COVID. And then we're considering this platform here. What is that? That ends in July 1998. Lines up really well with the drop here in August 2022. So basically like this. It gave us more. I don't really know how to explain it, but from COVID, it gave us a little bit more, a sharper rise to the chart pattern, you can see how from the V-shaped recovery, it sort of made that shoulder or shelf, and then it came up again, where in 97, it came up and it made that top, then it came down again, and then it came up and made sort of a flat top before dropping. So how I have this circled is actually how I see this chart. And then the just put that over here like I had it. And then this lag down from August 2022 to the bottom in October 2022, and then it came up, made that little shoulder, and then spiked. Same with over here. It came down. We have this platform here that we don't have because of the downtime from the 1997 area. So that, and then you can see over here so this peak in January 2023 lines up really well with this kind of shoulder after the rise up, and peak in May 1999, and then from May 1999 it slid downhill, and then went a little quicker from November 99 down into December of 99, where on today's chart it slides down and then it accelerates from to the downside from July 2023 down to the bottom in October of 2023, and then it sort of rises up, comes down again, chops around, and then starts to move up. And then over here where you can see I have the orange arrow, it did the same thing where it came up here in January of 2000, came down again, chopped around a bit, and then it rose up. So definitely a pattern that, trying to make that look a little better, but not a pattern that's as easy to see as some of the other patterns that I've charted. So the CVS video and the 3M video are a little bit easier to see than this one. This one took a little bit longer to chart and kind of understand where we're at in the cycle. But presently, I believe we are, if you look at your Realty Income Corporation chart from May 15th, 2000, and then kind of the little rise up from there to May 26, 2000. That's where I believe we are on the chart today. So from July 2024 up to today, August 19th, 2024. So that's kind of where I think we're sitting. I'll just zoom out on these a little bit. You can see what the chart did after that for this particular real estate stock. And here we are today. So I put in these measurements. I just use the ruler tool and I measure up from kind of the .com lows to around the peak of the Great Financial Crisis, 2007, 2008 area. I just measure up there to see, give me an idea of what percentage gains were made during those years from 2000 to 2007 and 8. And then sometimes for fun, I'll just put it over here and see where that gets us to. So for this one, if this is already, if the low's already in, which I think it is, then if it's not in, I mean, it might come back down to, I don't know, between $58 and $53. I would be willing to buy this stock anywhere $58 and lower for my personal account. And just to give you that measure up, on 190% over those 7 years in the late 90s, early 2000s, that would put us around $139 for a stock price on Realty income. The patterns are taking about twice as long to play out, so I would potentially expect to see a stock price up in this area within 16 years now, not 8. So unless something drastically changes with how the market is playing its patterns out, then I think, yeah, we'd have about 16 years. That's 190%. So anyway, just a complete guesstimate on that part of it, but just something that I like to do to entertain myself. And hopefully you guys can see a little bit of what I see in the charts, and this was a good one for you to check out. See you in the next one.